Hey folks, welcome to a product review at Finominal. Today we're going to look at Poland's growth fund, which trades under the ticker POLIX. Now, the fund provides exposure to a concentrated portfolio of US growth stocks, and these are selected on sustainable and high earnings growth. The fund manages around $3.5 billion and it charges 97 basis points. So let's explore in terms of what makes this fund so successful and if it's worth paying for such high fees. Now, what's kind of interesting about POLIX is that on its fact sheet and prospectus, it actually features two benchmarks. And so we're going to kick off with the first benchmark, which is the S&P 500. So let me select that over here. And what we can see from a performance perspective, so we see the performance since inception 2010, and that POLIX significantly outperformed the S&P 500 until 2021. Now, I suspect that during this period, the marketing team of the POLIX effectively was using primarily the S&P 500, which is natural. And that, of course, also led to that significant AUM gathering. As mentioned, the fund is managing $3.5 billion, which is substantial. Now, of course, we can also see, that the performance thereafter was far less impressive. And basically, since inception, this fund underperformed the S&P 500. Now, the second benchmark, which is also the one that gets automatically suggested by our algorithm, is the Russell 1000 Growth Index. So this is the second index that gets listed on the fact sheet. Now, let's have a look in terms of how POLIX stacks up versus the Russell 1000 Growth Index. And so what's kind of surprising is that there's almost no differentiation to the Russell 1000 Growth Index up to 2021, but then a brutal underperformance thereafter. And it's actually easier visualizing this as an excess return chart, because this underperformance, which just basically happened in the last, 2 years or so, has breached negative 40%. Now, can we explain what happened? So initially, it almost seems that this fund was tracking the Russell 1000 Growth Index, had the same constituents, which it practically couldn't have had because it's concentrated, but similar weights at least. Versus thereafter, the kind of bets that the manager took, didn't work out at all. Now, in terms of number of stocks, as mentioned, this is very concentrated. So POLIX only has 29 stocks versus 394 in the Russell 1000 Growth Index, which is an overlap of 36%. We can also look at this from a asset class and market perspective in terms of seeing how different is POLIX versus the Russell 1000 Growth Index. It's naturally all equities, it's all US, and even from a market cap perspective, there's not much differentiation. It's large caps. We can move on to sectors, and even this is very surprising that there are no large sector overweights or underweights versus the benchmark. We can see the overweight, or the large allocation for both of them is in technology, So that's kind of interesting to think about, that despite this significant underperformance, like negative 40%, from a market cap perspective, from a country perspective, sector perspective, it's very much like the index. So that effectively implies that there's something wrong is the wrong word, that the stock selection process, has been just ineffective. And we can look at the top 10 overweights versus the Russell 1000 Growth Index and underweights. Now, from an overweight perspective, we can see that POLIX has larger weights in Oracle, Amazon, MasterCard, ServiceNow, and Eli Lilly, versus it has a significant underweight in NVIDIA. Now, unfortunately for POLIX, what happened is that NVIDIA has been significantly outperforming basically all of these other stocks. And some of these stocks, specifically Oracle and ServiceNow, have basically cratered most recently. So that means that the fund manager has been very conscious about having the same sectoral weights, having the same country market cap weights versus the benchmark, the Russell 1000 growth, but just was betting on the wrong stocks. Now, if you kind of like, like the theme, which is concentrated growth, are there alternatives to POLIX? And the short answer is yes. So we selected 3 alternatives, which is perform iShares, Russell 200, top growth, the Vanguard mega cap stocks, and Invesco large cap growth stocks. And so we can contrast those versus POLIX and the Russell 1000 growth index overall. And what we see, right, well, as mentioned, all of those have long track records, right? So we can see the put track record of POLIX, right? We can see that actually the Russell 1000 growth index did outperform all of them, right? Also, the other ones are not far off. But if you're considering paying 97 basis points, which is what POLIX charging, you do want something for your money. And all these other funds are far cheaper, so cost range between 7 basis points and 55, right? So if you do like concentrated growth, right, there's just better options. Now, that kind of concludes our short review of Polen's growth fund. And although we kind of applaud Polen for taking very active bets in a sense of doing what an active fund manager is supposed to do, be concentrated, right, and not hug the index. Unfortunately, it's as much risk as opportunity. Hope that helps. Have a nice day.